Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, like, and share these videos. Looking back at last week's performance, we did see a minor reversal intra-week, but the S&P finished up 1.9%, recovering some of the week before last losses. The configuration continues to suggest that there is a potential decline, but it looks like it's going to be somewhat moderate. Now this week we have some major news coming out. We've got GDP coming out on Thursday, expected to show a 5% decline. A number bigger than that may have an impact, but everything's been coming in a bit better than most economists have been expecting. We also have home sales on Monday. We've got some PMI composite information coming out. And on Thursday, of course, we have jobless claims coming out. The overall configuration this week is going to be driven by the weekly trends. And these are suggesting there's more stability in the markets. This is Sunday night, so I'll be reviewing the WaveTech database and the output just to talk about the rotation that's going on. The intermediate models are continuing to get more traction. We've moved right up to the 42% level, which is a critical level on a database. I'll go through that in detail here in just a few minutes. Market sentiment is about as mixed I've ever seen. And if you look around in the world and what the reports are coming out, the markets are real divided. And that tells you we're going to see continued stability throughout this week. Many of you want to hear that there's a major decline coming. That's just not in the cards at the moment. We're seeing volatility pick up a bit. We're likely to see a reasonably wide range again this week. And overnight, we saw the futures come in drastically lower. They've already recovered from being down from Friday's close down about 50 handles to moving positive. Now it still looks like we're going to come in lower, but the London folks haven't started to come in yet. I'm doing the video a bit earlier tonight. Let's go ahead and take a look at the charts and see what they're telling us for this week. Before going into the technical section tonight, I want to review the database. Now we do have the dashboard working again on the Portfolio Expert websites. If you have an account for the WaveTech research tool, you can click on dashboard. It will show you this information here. We had an issue last weekend getting an update because we basically blew up the server with all the new users on and we couldn't run all the processes we usually run. So we've got that fixed now. Looking at this database, we're going to see the equities have now moved up to a 46% long. ETFs are at 40.91 and mutual funds at 39.64. As we toggle down and look at the overall database, you'll see now that this is starting to finally catch up with the steep rise in the markets, and we're seeing the intermediate model starting to get traction. Now you folks are going to get to see an interesting thing unfold over the next several days, maybe in the next couple of weeks, where we're going to see the intermediate database continue to get more traction, telling us that the longer term trends are starting to come into play. That's part of the reason why I mentioned in the opening comments that we're not going to see any type of major decline here, because we're seeing a lot of support showing up. We're seeing a rotation in the database. Everything's starting to come together on an intermediate level. On a short-term level, I'll go through that in a minute and talk about how overbought we were. We're going to see that overbought backfill and while the intermediate starts to take in. I'll explain that more when we get into the WaveTech database. But as we look at the different sectors here, you'll see that most everything has moved back toward that 50+ percentile range. Some things are back above 60 again, and typically these sectors only get about 68, about 75% long when they're absolutely robust. Now these are intermediate trends, so they're going to stay in that position for some time. In fact, the average holding period is around 220 days, which is the better part of a year. So we're starting to see some very significant changes in the construction of the markets. We're starting to see some things come into flow that we haven't seen. 6 weeks ago, it didn't look like this was possible, but the stability in the market, the market's remaining higher. There's a lot of rotation going on as market players are looking for something that's cheap, as everything got so overdone on the so-called new economy stocks. Now, as we look at the different sectors here, you'll see that most of these are, as well, are around 50% or better. And we're seeing retail is down in the 40 percentile range, but for the most part, a lot of these sectors, oil and gas, is still down in the 30s and the 40s. But we're seeing most of these sectors really start to recover. A lot of the healthcare industrials are starting to come back. Obviously, airport services, airlines are still down in the 25-30% range. So there's not a lot of traction there, as you would expect. And as we go through the industry groups, you can see exactly where the flow is. Now we'll go to the WaveTech research tool, and we'll take a look at the database, and you'll see of 16,639 symbols is now 41.68% bullish. Now, I said I would talk to you about this when we got here, is a number over 42% tells us that there's a sustainable rally starting to unfold. This is going to suggest that we're going to get this consolidation phase. We're going to continue to see the markets trade in a range, and when I go through the technicals, you'll see exactly what I'm talking about, but the database is confirming this. Now, it's interesting because we now have 8 of the 12 sectors on an intermediate level are long. So we're getting a lot of sector participation. The only flat ones are energy, consumer non-cyclical, and healthcare and utilities. So we're continuing to see this rotation happen, which tells us that markets are trying to get healthier as they get more breadth and more trends start to show up on an intermediate level. Now, when we look at the short-term configuration, if you recall, this was up at 90%. We now backed off to 77%. We saw about 1,500 sell signals on Friday on that little decline that we saw on Thursday and coming into Friday. So we saw a fair amount of selling, but a lot of these trades are getting very long in the tooth, or otherwise they're getting overdone. So be careful if you're using a WaveTech tool, looking at some of the new buys. You got to really scrutinize everything right now, because the short-term database is going to roll over. And so I'll try to explain this the best I can. What's happening is the markets went up. We're seeing consolidation at this high level. It's bringing the longer-term trends into play, where the short-term trends are overdone. So you're going to see selling on the short end or selling on the short-term models, while the longer-term models are continuing to get traction. And we're likely to see a fair amount of selling. I think we'll go down into the 60% level on this database, maybe a touch lower than that, but we'll have to see how things unfold. As you'll see when I go through the technicals, everything is really starting to stabilize. So let's go ahead and go through the charts. Looking at the S&P cash, as I said in the opening comments, we're continuing to see the market consolidate here, and we're remaining above the 200-day moving average. And that's going to continue to be the main support line, which is currently at the 3018 level. Now, there's a couple key pivot numbers and key support levels that are underneath the market for the next couple days. They are 3064 and 3049. Now, these levels are going to be significant. And then, as I mentioned, we have the 3018 level or 3020 level. So there's a lot of support under this market. When I talked last week about the reversal pattern that was unfolding, I talked about a move down to 3060, maybe down into the high 29 handle. But for the most part, it looks like we're going to remain above that level at the moment. Since I did the front end of the video, the futures were up about 0.5%. Now, they've given up about half of that rally so far as we're getting closer toward the opening of London. There's still a little ways to go. I've been noticing over the past several sessions that we're seeing an early crowd coming in London and starting to buy or sell ahead of time, and that's been a pattern over the last several days. But looking at the market grid, looking at the PPMs, they're telling us two things. Is right now PPM 1 is at a minus 0.31, which tells us we're in a minor trend level on the downside. PPM 2, you'll see, is at a plus 0.20, and PPM 3 is at a plus 0.25. So they are basically at trend levels on the upside. So that suggests that the cyan line, otherwise 3083 is the cyan line, which is a key number as well for the trade that I've been talking about for a number of weeks that we put on at 28.44. That thing is still hanging in there by just a little bit. A close under the 30.84, 30.90 level today is going to be close to triggering this thing and taking profits on that trade that's been in since May 4th. But for right now, we're continuing to see this consolidation with a slight drifting lower. A lot to cover tonight. Originally, I was talking about a possibility of an ABC, which is still exists on a weekly basis, but on a short-term basis, what is happening, it almost looks like a perfect four. If you recall last week, the entire thing I was talking about as far as what was going to signal that C wave missed by literally less than $1 on the S&P cash. It did trigger on the futures, but it didn't trigger on the cash. And as we know, last Monday we saw that huge recovery rally and closing higher and moving all the way up into the 31.50 level before the high of last week. But this pattern is setting up here is significant. Let me draw in the Elliott wave pattern here. Going back to the March lows, we had a 1-2, we had a wave 3, an ABC wave 4, and then we had a wave. We had a three-wave pattern here, and now we've got this potential ABC pattern unfolding. And with the rising moving averages under here, as I just discussed, the ppm2 is at 0.20 and ppm3, which is that green line right here. That is suggesting that there is right now only a 40% probability that that level will be penetrated, suggesting that we're going to decline down to the maximum of the 29.89 level, but it is advancing at 0.25% per day, which tells us that that number will be very quickly above the 3,000 level, which will correspond with the levels I just talked about a minute ago at that 30.20, 200-day moving average, and then the levels of 30.64 to 30.49. Even if we do get some follow through, because we did have a reversal that occurred on Friday, it's not going to be drastic, or it doesn't appear that it's going to be at this time. Over the next several days, what we're going to see is whether this ppm 2 and 3 can maintain their momentum and how the market trades. Now, if we do manage to close lower today and close down toward those levels, a couple things are going to happen. We're going to see an exit of that trade from May 4th. It's going to go into a neutral mode on the models. The intermediate models still remain neutral on the S&P, so it's just going to tell us that we're going into a larger consolidation phase. Now, I'll go through the weeklies in a minute, and there's some really key numbers, and the market grid for the weeklies is going to be really important to watch. I post the market grid every day, and not only were the daily numbers updated, but so were the weekly numbers. Make sure you look at the weekly market grid so you can see exactly what I'm talking about. I'll discuss that in a minute here. Market grid for the weekly, as we come in, this is the cash market. So as we look at this, there's a couple key numbers to watch out for. There's the 30.49 number I talked about in the grid. It's S1. Now, it's possible we could see a contraction in the volatility this week, but with GDP and some of these other numbers coming out, we're likely to see some reasonable activity as the markets unfold this week. But S1 and R1 are going to be the big numbers to watch early this week on a weekly grid. So 31.46, last week's high I believe was 51. Let's take a look at that. Last week's high was 55, so we're looking at a possible retest of that level, and on the downside the 30.49 level is going to be key. It's possible that we could get through that 30.49 level, and S2 then would represent the 40-day moving average I just discussed, which would be the extreme of this pattern for this week would be 29.94. Make sure if you're trading short term that you're watching this daily market grid and keeping the numbers in mind on the weekly as well. The other thing that is occurring here, and I've been discussing this over the past several weeks, is that the ppm1 is continuing to lose its momentum, and it's going to drop even further. This is the cash market. The futures are showing it's going to drop to about 0.7, but 0.7 is still a robust trend. So that tells you that the underlying trend as well here is still very robust. The 29.66 level is this red line, which is the 10-week moving average, and that's moving up about 60 handles per week. So that's going to put us once again right at that 30-20, between 30-20 and 30-40 as we come in this week. There's all kinds of numbers down here. I just don't see the market going below this level at all. This is going to be the floor for this week. So watch this grid on the weekly. As I said, this is going to be the key to trading this market this week. From a trending standpoint, we're really just in a neutral phase here. In the opening comments, I talked about volatility expanding on a weekly basis. That's exactly what's happening here. If you look at the grid, the range for the grid is huge this week. It's all the way as low as 28.91 and as high as 33.03. The key pivot numbers this week are going to be 31.46, which is a retest of last week's high, just short of it, 31.55 last week high, and a 30.49 level. And there's a complete cluster of numbers. Those of you that have been watching this channel know that those clusters mean everything. There's a 30.64 number, a 30.49 number, a 30.20 number, and on Tuesday that number will continue to move up. It's all going to cluster right around that 30.20, 30.40 number. So if we do see weakness, that's where it's going to stop. But those are going to be your numbers to watch this week. Any declines right now are going to be moderate. You're probably going to be able to trade off these lower numbers and look at the daily grid for further short-term ideas to fine-tune some of these moves. The final market I'm going to cover tonight is going to be gold. It started to act really well last Friday. We're seeing some follow through today. We're up 0.84. We're trading back at 1783. The PPMs are trying to come back alive. PPM1 is at a plus 3.4, so we're back in trend mode. The support is at 1754 now and moving up every day. There's a cluster of support at 1754 down to 1749. That's likely to be the bottom of this range. Now the upper end of the range, we're pretty close. RXT is 1794. So far the high's been 1791 overnight. But the pattern is starting to look very positive. PPM 1, 2, and 3 are looking like bottoming patterns, and it looks like we're getting ready to try another run on the gold. The weekly chart confirms this. We have a plus 3.1 on PPM 1. Anything over 0.25 is a trend. Remember, those are price pressure momentum, so it's telling us the angle of attack. The support 1756 is also the 10-week moving average coming right in this pattern. Just a major cluster of numbers. We managed to get above that on Friday's close, and now we're looking on a weekly grid to possibly trade up toward the 1803 to 1821 level. The extreme for this week is 1837, so I'm expecting to see some higher prices this week. And just remember, two events that are happening this week: the WaveTech training at 4:30 p.m. Eastern Time after the close on Tuesday, and then our weekly live cast on Wednesday, where we'll cover the markets. The last couple live casts we've been going for a couple hours, and that's fine with me. We'll just run it until we get tired. Thanks again for watching. We'll talk to you tomorrow night.